Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Daniel Cawrey of Pactum Capital. Daniel, thank you for joining us.
Thank you for having me.
So what was your background before investing in early stage companies?
So that's a good question. I would also want to point out my firm doesn't invest in early stage companies. We're a fund and we're a financial services company that focuses on cryptocurrency. My background is in technology though, and in IT security. I have an information science degree. I worked in IT security for the utility sector. And I got involved in cryptocurrency about 5 years ago as an editor at a website called CoinDesk, which is now the largest information resource for Bitcoin and what they call blockchain.
So what led you to start a fund in this sector and financial services? What brought you here?
That's a really good question. So like I said, I've been in cryptocurrency for 5 years full time. And I started out sort of just learning about the industry in 2013. And just writing about it as an editor at CoinDesk. And after a couple of years, I wanted to get involved in the industry more deeply and work at a company or a startup that had some potential in sort of helping this industry grow. So I worked on a consumer startup called ZapChain, which was a micropayment service that used Bitcoin. It was during that time I realized that cryptocurrency wasn't really ready for the retail sector or the consumer sector. So I made a determination that I wanted to work on things that were of a financial nature with cryptocurrency.
So for those who want to invest in this space, what would be your advice for them at this stage?
Well, my best advice would be to be cautious. I mean, you really are going to have to take like a really long-term view of the industry because it's very new, it's very volatile, and things change very quickly. And so for the average person, I think it's a difficult proposition for folks who have like a 401k or using Robinhood. It's really been something that has gone up and down. And for a lot of smaller investors, that's not something that they're really super interested in. They're interested in seeing their portfolio continuously grow over time. Whereas I think like cryptocurrency as an asset is more of like a speculative bet right now, but it will stabilize over time, I think. So if you're a younger person and you're looking to sort of supplement your 401k or other investments, it might be a good idea. But for investors looking for an immediate payoff within a year or two, it's hard to follow the cycles and just have an expectation of return.
So the industry is changing quite rapidly right now. How do you see it evolving at this stage?
I continue to see it evolve as almost like a new stock market. And my opinion and my firm's opinion is probably a little bit different than some others because a lot of folks want to see cryptocurrency be used in retail applications. They want to see like Bitcoin on Facebook. But it's been my opinion for the past couple of years that the consumer use of cryptocurrency, there's really nothing there except for speculation. Do I expect that to change? Maybe someday, but not anytime soon. And so I'd say like over the next 5 years or so, cryptocurrency is going to be mostly a speculative bet, but in 10 years, it's possible there may be like some bigger use cases for mobile applications, social networks, using it to transfer ownership of assets between one another quickly. But we're just not really there yet. The computer industry went through this, the phone industry, every industry goes through these growing pains, and that's where we're really at with cryptocurrency right now.
Do you think it's going to have a lot of business-to-business or core infrastructure applications before it becomes retail-oriented or consumer-focused?
I really think you really hit it on the button there because, I mean, you look at anything in terms of technology, it usually the infrastructure is built out in businesses and enterprises first, and then it comes to the consumers later. Very rarely will you see like a blockbuster consumer application come from a brand new technology.
And so how does that impact the investing in this sector? Is it just shifting toward anything infrastructure? There seems like there's plenty of those out there. Or can you invest in any endpoint applications?
There are ways to invest in so-called endpoint applications in what's known as ICOs, but these are things that are very speculative and I think are outside of the realm of like a retail investor or a consumer level investor, somebody who would be interested in buying stock in Tesla or Apple. Those are real companies that have real revenue, whereas these ICO investments in the infrastructure are so new, it's hard to say if these companies will ever make money, would ever provide any kind of dividend, and are very speculative.
So what's your investment thesis for the blockchain today? Where do you think the opportunities are?
Yeah, we have a very specific thesis, my company, Pactum Capital. And I would say some people would say it's somewhat contrarian. I don't know if I agree with that. There are a lot of funds out there today that invest in these aforementioned ICOs. We actually don't do that. We are active traders in the market. My co-founder and business partner is a former long-short equities trader. And so what we do is we basically trade on the volatility in the market. And we focus on two assets, Bitcoin and Ethereum. And we focus on very specific exchanges. For example, we use Coinbase's GDAX to do spot Bitcoin and Ethereum. And we also use the CME to do Bitcoin futures. So we're doing some advanced trading stuff for our investors that is very different than the traditional buy and hold strategy that a lot of folks use in this industry.
And how did you come to that thesis? What led you in that direction?
Pure volatility. I have seen this market go up and down, for 5 years. There's been so many different cycles, and there's so much opportunity in just trading versus buying and holding. We've just identified that the cryptocurrency markets are not efficient. They're nowhere near as efficient or as liquid as the traditional equities markets or the currency markets, for example. But one thing that we do realize is that the Bitcoin and Ethereum spot markets and the derivatives markets are pretty liquid. And so there's a lot of opportunity there to trade.
So aside from liquidity and volatility, what are the other challenges in this space? Of course, ICOs are speculative, but what about regulatory and what about the technical challenges that are out there as well?
So regulatory and technical are great issues to bring up. From a regulatory standpoint, the regulators, the way that we operate is that the regulators have said that Bitcoin and Ethereum, they don't look like, as instruments, they don't look like securities. They don't look like money. They look like commodities, which would be regulated under the Commodities and Futures Trading Commission, which is the CFTC. So we have kind of some guidance on that. The issue is that, like, as a firm that wants to pay attention to regulation, all of the other assets that are out there, and there are literally over 1,000 of these, they don't really have like a label yet. Are these currencies? Are these securities? Are these something for utility? It's hard to say. And that's the challenge on the regulatory side. Now, from a technical side, the biggest issue that I've seen is scalability. Okay, we've had this issue with Bitcoin, and this is why I moved into working with cryptocurrencies as a speculative asset, is because the scalability and the usability of most cryptocurrencies as actual currency is very difficult. These networks are built, they're decentralized, and unlike centralized systems like Visa, which can process a ton of payments per second, decentralized systems just don't have that capability. And so that's been a big issue. It's been a big issue with Bitcoin. We're seeing it now with Ethereum. Seems like any new cryptocurrency that comes along and starts to get any traction, there ends up being some sort of scalability problem. And there might be even other technical problems like security issues as well with future cryptocurrencies that can scale, but then there might be a security problem because they're less decentralized, or there's so much trade-off between these centralized and decentralized systems. It's very challenging.
So where do you see the immediate opportunities to pursue for potential investors?
That's a good question. I think if they want to pursue an immediate opportunity, I think that they should look at what are the bellwethers out there. I'm hesitant to provide investment advice, but what are the big players? What's the most liquid thing? If they were an accredited investor, I'd say look into investing in a fund. But not everybody can do that. So looking at the big players, but also be cautious that things can change. And this isn't like a normal market. This isn't like the equities market. This isn't your 401k. That's why Bitcoin's not available on the regular markets yet, because it might just not be ready for that yet.
It seems some sectors are geared for it better than others. I've never talked to a supply chain person that didn't just jump up and down saying, I want that because it solves a lot of problems in the space. And then there's also, the finance sectors where for some applications, I think it fits well, but others it'll be challenged based on scalability, regulatory, et cetera. So some industries seem to be better suited for it than others, and supply chain seems to be more of an infrastructure play. It's less and less about consumers and more about business to business, where they, I think, benefit from a lot of the benefits that come from a blockchain solution. Any other industries come to mind?
I really think that securitization of assets is the biggest one, to be honest with you. And so I probably need to explain what that is because it sounds like a loaded phrase. Imagine that you have an asset, and the average person does have some assets. The average person will eventually, their biggest purchase will be a house. They'll buy a car, and these are assets. And the way that the system works today is the recording of those assets are all paper-based. There's these title companies that are middlemen. There's a lot of middlemen paperwork type of things that in 2018 maybe aren't so necessary. What if I had tokenization or securitization of my car on a blockchain, and that token I could just send to you once you've sent me payment, and that transaction could happen within minutes? You can't do that today. With cars, you've got titles, there's all this other financial stuff that goes into it with the banks. I think there's just too much middlemen in some of these transactions that could really be reduced. There could be less friction. I think I was of the belief maybe 5 years ago that this kind of stuff could replace banks, but I think it will supplement banks. I think it will supplement the existing systems. I don't think it's just going to disrupt and make things disappear right away, but I think it's going to make things a lot more efficient than they are right now. That's the biggest thing that I see. And if we can do that and start with that, with assets, which are already really what these things are, these cryptocurrencies, then we can move into things like looking at the medical industry to reduce waste there and friction. And that's sort of where I see it, is like, where can we use this technology to actually reduce friction and waste? But it's easier said than done. I also would say that as a caveat.
Sure, it's a fast evolving industry, and be interesting to see what applications really take hold and provide value. It seems like EOS and some of the bigger players are coming out with their blockchain now, and so it'll be interesting to see what the impact is of those systems as they're well funded, and it seems like they've got a very robust systems. Any thoughts about that?
These are all very interesting projects. This stuff comes across my desk every day. There isn't a day that somebody comes to me with a new idea for using a blockchain to disrupt things, but really, there needs to be a lot of work on the infrastructure, on the scalability, and on the security of this stuff. That's my biggest concern, is that I think there needs to be a bigger focus on that than blockchain just disrupting an industry immediately. I don't see that happening. After 5 years of being in this, I haven't seen any industry really being disrupted by this yet. It's going to take a lot longer than I think people realize. And most of that has to do with the regulations and the technical scalability and security of these things.
Absolutely. Well, in the last few minutes that we have, what else should we cover? We talked about securitization. Was there anything else?
I think I would say that while there's a lot of excitement out there, I just think that people need to be very careful what they're investing in. You really need to do your research, what you're looking into, and really pay attention to these markets. Like, I feel like with all of these cryptocurrencies that are out there, there's only going to be a very, very slim number of winners. If we look back to the 90s, all the companies that existed back then, what's left from that then, right? There's not much. I mean, there's Amazon, Yahoo, which arguably has not performed that well. So I think really, like, people need to be very careful about jumping on the bandwagon and sort of focusing on like the things that look long-term, that have been around and have a big community. That's what I would suggest if people want to start looking into cryptocurrencies or blockchain in general.
Yeah, that's good advice. So how best for the listeners to get back in touch with you?
So we're pretty easy to find. We're at pactumcapital.com. I'm on Twitter at Daniel Cawrey. I'm pretty easy to find. I'm all over social media. Yeah, that's pretty much it.
Well, great. Well, appreciate you sharing your thoughts with us today and hope to have you back for a follow-on real soon. And want to thank you for your time.
I appreciate you having me anytime.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.